But what I believe we are seeing, kind of what we were just talking about, is a slow motion global run on physical gold. And the pullback from those highs wasn't a breakdown, it was a consolidation. Catching its breath, not throwing in the towel. Pick your euphemism. But the bottom line is gold isn't just strong, it's structurally more attractive than many people realize. And I think that the recent pause is the calm before the next leg higher. That I do believe. And maybe this is it here today as we're up over $100 as we're talking.
In today's news recap, HSBC's gold token tops $1 billion in trades as retail investors embrace tokenized assets. HSBC Holdings PLC said trading volume for its retail gold tokens surpassed $1 billion, underscoring growing demand for tokenized real-world assets as banks deepen their push into digital finance. John O'Neill, head of digital assets and currencies at HSBC, announced the milestone during Hong Kong FinTech Week 2025, noting that the HSBC Gold Token has facilitated more than 100,000 transactions since launching in March 2024. The product is the only retail-focused gold token approved by the Securities and Futures Commission of Hong Kong. Now we'll show you the best clips of the latest interview, but first, smash the subscribe button, hype the video, and check goldsilverstacks.com to get the Stacker's Handbook, the ultimate guide to trade the gold-silver ratio and stack efficiently without relying on...
True, no matter what, it's very true. David Jensen does a masterful job of showing that. But in essence, they're trading, 700 or 800 million ounces a day in London. 2 billion a day if you add the COMEX and the Shanghai market. But in London, 700 or 800 billion ounces a day with a float of 150 million ounces. What could possibly go wrong? And so, yes, they are. And I mean, you can simply say the silver inventories are extremely thin, and the pressure is accelerating. It'll be much greater if China and potentially the U.S. curtail exports. Part of naming silver a strategic element is that the U.S. can now very easily, the president can restrict and curtail exports. And this sets the stage for a potentially explosive reaction if demand or the systemic stress accelerates. What is the systemic stress? It's if one of these banks in London has a failure to deliver. And it's not just the silver market. These banks are connected to everything financial. And so you would expect to see a contagion, a systemic reaction reverberating through all markets. But yeah, I mean, the truth of the matter is London has been exposed as far as I'm concerned. And they're hanging on by a thread. There's exponentially more demand than there is supply, and there's exponentially more contracts than there are bars. That is a powder keg waiting to happen.
Yeah.
Let's just state something that I've never seen before in my career, and I've talked a little bit about this, but it's worth mentioning to your listeners. Look, in my career, almost 36 years, I've never seen Wall Street or Main Street acquiesce to anything other than 5% of gold, of an asset, a portfolio rather, being in gold. And, and it was acquiescing at best. Fine, put 5% of your money in gold. Now, recently we've seen the chief investment officer of Morgan Stanley say, no, sell half your bonds and buy gold. Their new platform, according to him, is 60 stock, 20 bond, 20 gold. You got Michael Hartnett, the chief analyst for Bank of America, with this very, very, very expensive newsletter that goes directly to the institutional traders, like many thousands of dollars a year. He's saying, no, it's 25, 25, 25, 25, 25 gold, stock, bond, short-term treasuries, gold. You got Jeffrey Gundlach, the bond king, saying, no, 66, what did he say? Jeffrey Gundlach said, 25% in gold, Monday morning, 25% in gold is not overweight. And then the 6,600 part, that's Jeffries. They used to be a primary distributor for all the world's mints. And they said 6,600 is their next target, at least intermediary target, for where they expect gold to go before it takes a little bit of a breather. You have massive institutional money, traders and analysts and chief investment officers speaking to the most sophisticated traders in North America saying 25% of your portfolio in gold is not too much. I mean, that's just insanity, if you ask me. Goldman Sachs said, if 5% of the money comes out of the bond market because they fear that there is no independence on the Fed anymore, that gold would go to 5,000 like that. Well, when you have Stephen Mirren sitting in the Fed, who it was Trump's advisor and the architect of the Mar-a-Lago Accord, he fills the vacated spot. What independence? The Fed has no independence. So gold is moving in that direction. You got Bank of America just saying $67 for silver is their target for next year. So when we talk about record highs around 4,400 gold and then it falling off and everyone's saying it's over, I find it disingenuous at best when you have these analysts saying this. And here we are back up above $4,100, and that shows the strength and the underlying support. So gold's held up because of central bank accumulation. And to me, that's what we've been saying forever. We've seen physical demand rising and global monetary stress increasing, all of the stuff that we talk about. But what I believe we are seeing, kind of what we were just talking about, is a slow motion global run on physical gold. And the pullback from those highs wasn't a breakdown, it was a consolidation, catching its breath, not throwing in the towel. Pick your euphemism. But the bottom line is gold isn't just strong, it's structurally more attractive than many people realize. And I think that the recent pause is the calm before the next leg higher. That I do believe. And maybe this is it here today as we're up over $100 as we're talking.
In today's news recap, HSBC's gold token tops $1 billion in trades as retail investors embrace tokenized assets. HSBC Holdings plc said trading volume for its retail gold tokens surpassed $1 billion, underscoring growing demand for tokenized real-world assets as banks deepen their push into digital finance. John O'Neill, head of digital assets and currencies at HSBC, announced the milestone during Hong Kong FinTech Week 2025, noting that the HSBC Gold Token has facilitated more than 100,000 transactions since launching in March 2024. The product is the only retail-focused gold token approved by the Securities and Futures Commission of Hong Kong. Now, smash the subscribe button and turn on notifications so you do not miss out our daily recaps. And go to goldsilverstacks.com to get the Numismatics Handbook, the perfect guide for stackers who want to get active trading gold and silver coins instead of selling their gold and silver bullions for fiat. Enjoy the episode.
Is to reshore manufacturing. And the only way you do that is to massively devalue the dollar. Look at Triffin's dilemma, which says as the world reserve currency, you will always have a net deficit in global trade because your major export's going to be dollars. The world needs more dollars than we can provide through trade alone. And so countries over time have to sell their currency to buy ours, weakening theirs, strengthening ours against those currencies, that is. And so over time, manufacturing flows to where it can be produced the cheapest. Vice President Vance has come out on White House letterhead saying, no, we can't do this anymore. Triffin's dilemma, it has been a subsidy for the consumer. It's been a massive hindrance for the producer. It's a broken system. We have to move away from it. Even the knucklehead that was Jared Bernstein, a true knucklehead, if anyone remembers him trying to explain how treasuries were created, he was the White House lead economic advisor under the previous administration. He did write a report called Dethrone King Dollar, where he says the same thing. Being the reserve currency is now a hindrance rather than a benefit. Now, if you are trying to bring back manufacturing, you have to have a weaker dollar. How do you get a weaker dollar? You let gold go to levels that no one can imagine, and I think you will see that. Now, you could argue Bitcoin too, but take a look at USA Tether as an example. USA Tether, which is already Genius Act compliant, their CEO is a man named Bo Hines. Bo Hines was Trump's crypto czar until August. So the rules that Bo Hines was creating, he is now benefiting from. What is Tether doing? They have 12 billion in gold right now, more than they have in Bitcoin. About 8 billion they have in Bitcoin, according to their last numbers that just came out. They were just at the Beaver Creek Mining Summit as a company. Tether was, which is one of the biggest mining summits in the country. Again, talk about Chinese disintermediating the market. Now, Tether is. So let's just play this out. the Genius Act says that any time, and to your point, I think they're using the cryptosphere, if you will, to get to where they want to go. And I know that sounds kind of crazy. I mean, it's like, here's how it works. So anytime money moves, it'll be backed by a stablecoin. It will move instantly, like Venmo or Zelle across a blockchain network, instant settlement, if you will, and it will be backed by U.S. treasuries. Now, the interest on those treasuries is not transferable to the holder of the stablecoin. In other words, Tether gets to keep that interest. What are they doing with it? Well, they're buying more gold than they are Bitcoin, but they're buying Bitcoin too. Now, if you realize that Bo Hines is in this and kind of an advisor, what if they've worked out a deal with some of these stablecoin holders? Say, here's what you're going to do. Anytime a dollar moves across the globe, you're going to back it with U.S. treasuries to lower the rates synthetically, not organically. You're going to do that. And then you're going to take the proceeds and you're going to buy Bitcoin to someday maybe pay down the debt. And you're going to buy gold, not to let gold go much higher just for the hell of it, but because rising gold devalues the dollar, right? And makes exports more attractive. Now, you mentioned backing U.S. treasuries. I mean, we had Michelle McCory, who runs part of my YouTube channel, had Judy Shelton on again. I had her on 6 months ago, but she said the same thing to Michelle, that in no uncertain terms, she believes, according to what Trump told her, that we will peg the back end of the bond market to gold July 4th of next year, the 250th anniversary of the country. So let's put it all together. So if you have synthetic demand created through the stablecoin movements by everything has to be backed by short-term U.S. treasuries, and then that pushes rates down, gives demand to the treasury synthetically to run the government, and the proceeds of those things go to gold, which raises it synthetically, and to Bitcoin. At the same time, you now peg it to the back end of the bond market, the 5, 10, 20, 30, and even 50-year treasury. What does that do? Number one, it keeps rates low to stimulate the economy synthetically and gives synthetic demand for the U.S. Treasury. It takes all of that extra money and puts it towards gold and Bitcoin, devaluing the dollar, giving us the ability to slowly pay down our debt using Bitcoin. But now if you take gold and back it to the Treasury market on the back end, you have zero upfront borrowing costs. You bring back your manufacturing at zero upfront borrowing costs. Yes, you have to pay it in gold in 20 or 30 years. Okay, fine. But the upfront borrowing costs are pretty much mitigated to zero, bringing back your manufacturing, reshoring it, making all the new facilities that you need to make at zero upfront borrowing and selling your goods into a massively devalued dollar. In other words, what I believe they are doing, look at all the crumbs, they're giving up on the reserve status in order to support the bond market.
What do you think of today's show? Do you agree with Bill Holter? Is the end game going to happen very soon? Post in the comment section down below how you are protecting for the end of the world, and watch this video right here because it's a perfect fit for you. And I'll see you on the other side.